Hi, thanks for attending the webinar today. It's Karis, Shannon, Karen, Shirlene, and Helen, and we're just going to go through the National Risk Assessment, some actions that we expect people to take, some actions that we've taken, and then there's going to be some time for a Q&A at the end. So I'm immediately just going to pass you over to Shannon.
Hi everyone, thank you for joining today. So to give you a very brief overview of the National Risk Assessment, the process and the methodology, as this is something that we have already covered in the AML forum, try and keep this fairly high level. So the National Risk Assessments have been done in 5-year intervals, first in 2015 and again in 2020. So the latest iteration that's been published over the end of 2025 and this year is much more comprehensive, and it is been established with a lot more data, typologies, strategic analysis, and a lot more public-private partnership and engagement. So all the risk assessments use the World Bank methodology like we did previously. It's a well-established and adopted methodology, the only exception being the forthcoming proliferation financing risk assessment, where we have used the Royal United Services Institute methodology and guidance, which is much more tailored towards proliferation financing. So the PF risk assessment is currently going through the governance channels now, and providing approval is granted from the Economic and National Strategy Board over the coming days. It should be published in the first couple of weeks of July. So obviously we'll do lots of communicating that as that is published. So the World Bank National Risk Assessment methodology uses a structured risk-based framework that assesses both threats and vulnerabilities across the sectors in both money laundering and terrorist financing risk. It combines quantitative data and expert judgment, producing inherent and residual risk ratings to help jurisdictions prioritize policy, supervision, and resource allocation. We've used a ground-up approach with sector and topic-based risk assessments, helping to build the overall picture of risk. And that full suite of documents is available on the Isle of Man Government's Countering Financial Crime website, which we'll circulate the link to afterwards. It's also on the GSC website. So operators will need to read the reports and take any appropriate actions, which we'll go into a little bit shortly. And comprehensive support will continue to be available to help operators digest the findings. We also have executive summaries of the key findings to highlight the main takeaways, and we're planning on publishing this webinar to YouTube and our website. So if there's anything else that you think would be useful, please do just let us know. So to give a brief summary of the National Risk Assessment, the island's risk profile reflects its position as a mature international financial centre, so those core structural drivers being high volumes of non-resident customers, significant cross-border financial flows, and use of complex legal structures, so particularly companies and trusts. The greatest threat is from foreign proceeds of crime, so offences committed in other jurisdictions, and the principal external predicate offences being fraud, tax evasion, corruption, and organised crime. In respect of money laundering specifically, the island's overall money laundering risk is assessed as medium-high, which remains unchanged from the 2020 National Risk Assessment. So threat levels have increased, particularly in relation to foreign predicate offending, cyber-enabled fraud, transnational organised crime, and the use of sophisticated cross-border laundering techniques. However, the national controls and capabilities have strengthened significantly over the NRA period. So vulnerability is medium overall. As I've said, controls have improved. And in respect of the concentration of risk, the highest exposed sectors being banking, online gambling, and trust and corporate service providers. Foreign and cross-border money laundering risks are assessed as medium-high, and domestic money laundering risk is assessed as medium-low. So international money laundering investigations have increased over the review period, and there's been significant asset restraint and confiscation has been achieved, which includes crypto assets. Emerging risks include the growth of virtual assets, the use of other alternative payment methods, and developing technology, including AI, which could enable identity manipulation and increases the speed, scale, and opacity of money laundering. And quickly turning to terrorist financing, which we did cover at the last AML forum, so I won't go into too much detail. The island is assessed as having medium-low TF risk, unchanged from the previous assessment. There's no evidence of domestic terrorist organisations or TF cases, indicating a low inherent domestic risk. However, the risk for us arises from the potential misuse of the island as a transit jurisdiction. And controls are generally effective, but continued vigilance is needed to avoid the misuse of our financial and non-financial sectors. So turning to the gambling sectoral risk assessment, the gambling money laundering risk is driven by high volume cross-border financial flows and increasingly complex supply chains in online gambling. The overall money laundering risk for the gambling sector is medium high, which is seen an increase from 2020. Online gambling is rated as medium risk, driven by the global threat evolution, COVID-19 and rapid technology developments. Terrestrial, so land-based gambling, is rated as medium low. So whilst heavily cash-based, it's a small and mostly domestic sector with much smaller volume of funds. As the island has an elective software supply regime, software supply businesses don't fall under the international standards, nor are they captured in the World Bank tool that we've used, but they have been considered as part of the wider assessment, but it hasn't been given a standalone rating like the online and terrestrial sectors. So core threats for online gambling include criminal ownership and control of gambling businesses or software suppliers via front companies and complex corporate structures, exploitation by organised crime groups, including those from East and Southeast Asia for money laundering, cyber-enabled crime and other illicit activities, and criminals using false or stolen IDs, synthetic identities and mule identities to access gambling services and obscure their identities to bypass controls. Turning to terrestrial gambling, cash-intensive operations remain, and the casino-specific instruments remain the primary channels for laundering domestic predicate offences primarily. From a more global perspective, emerging risks include the use of advanced technologies, as we touched on before, so the use of AI, deep fakes to obscure identities, automate fraud and virtual assets to facilitate cross-border transfers. And the risk assessment also refers to the use of turnkey solutions or white label platforms, which are pre-packaged business setups, which can allow the rapid establishment of operations. However, the risk assessment does note that any white label arrangements through a GSC licensed entity would be subject to full regulation and overseen with AML responsibilities, and I don't think we currently have any such arrangements on the estate. Gambling products are higher risk where they allow rapid deposit and withdrawal with minimal play, where they facilitate collusion or value transfers between accounts, or can support high value VIP or professional play that enables large, fast moving transactional flows. The large volume of transactions can enable the disguising of larger sums. The gambling sector intersects with the TCSP sector as well, so any TCSP related risks should be considered. So the assessment notes that that it could include fragmented oversight, varying levels of capacity and risk appetite amongst service providers, outsourced AML roles, and complex structures which can create areas of risk. However, the FSA and the GSC do work very closely together, have legislative gateways to share information and intelligence, and this is something we'll continue to do and enhance going forwards, looking at any kind of joint up outreach and supervisory opportunities. Terrestrial gambling, we touched on the cash-intensive nature of operations, anonymous or low traceability transactions below thresholds, and the ability to convert cash into chips with minimal play before cashing out as winnings. So physical collusion and use of third parties or proxies can also be a risk. Turning to network services and software supply, these also involve complex cross-border arrangements that can be subject to exploitation. So these risks can materialize through the layering of funds across jurisdictions, transfer of assets through complex structures, or obscuring of beneficial ownership. However, supervisory controls do go towards mitigating that risk. So overall, the money laundering risk assessment is medium high, and terrorist financing, that is unchanged from the last one. So just moving on to, before I move on, I'll also mention the gambling risk assessment contains a product risk assessment, which reflects the inherent risks of the different gambling verticals. So operators should consider those that apply to them as part of their BRAs. And in terms of our kind of supervisory priorities, my colleagues will touch on those from their separate divisions in a moment. There are also other sectoral risk assessments for the other material sectors, being banking and TCSPs. There's also an insurance one. We also have a new virtual assets risk assessment. So they are also things that should be considered as the gambling sector is cross-cutting with other sectors. It's essential to look across, not just within gambling itself, and look at how the risk is transmitted through any different channels or structures or technologies. So that's a kind of whistle-stop tour of the National Risk Assessment. As I said, it's available on our website, and we also have supporting documents that look at the money laundering risk and risk indicators. But I will now pass over to Caris just to touch on some of the key typologies for you to be aware of.
Okay. So most people are probably familiar with at least the first few of these, and hopefully all of them if you've read the document. So I'm not going to be covering them in detail, but we've put them in here just to visualize them as we go through. The first typology examples everyone will already be familiar with. The first typology in the gambling NRA is the cash-in, cash-out typology. For this one, a customer deposits illicit proceeds into an online account or converts them into chips at a terrestrial casino, and then cashes out with minimal activity, and these can then be attributed to legitimate winnings. This often involves money mules and/or betting mules as well. Flags can include lots and lots of quick transactions, minimal play, or the use of cash or prepaid vouchers that can't be traced. The second one, typology 2, covers fraudulent accounts where a customer uses false or stolen information to open an account or purchases an existing account in order to move money or engage in cash-in, cash-out typology, which obviously links to the previous one. Flags can include a reluctance to provide information or appear in person or in video. In other words, clearly avoiding demonstrating who they are. It's therefore important to understand what normal looks like for your business and take appropriate actions where things don't feel right. Typology 3 is collusion. Collusion is predominantly exhibited in games which facilitate peer-to-peer activity, such as poker with chip dumping, where players will deliberately collude to win or lose against each other to facilitate the transfer of illicit funds. Collusion can be carried out through other products, for instance, betting on both sides of a sports event, or to ensure a return to one player, betting or deliberately entering into a peer-to-peer bet through an exchange, which will result in the transfer of funds. Again, this is quite consistent with the sector historically. So This shouldn't be anything new either. Typology 4 covers lavish spending. So individuals may be known to have criminal associations or to engage directly in criminal behavior, may use their illicit income for leisure activities, especially those with VIP status. Conversely, problem gambling can create financial stress, which in some cases may increase a person's vulnerability to undue influence or risky behavior. This doesn't imply criminality directly, but financial pressure can occasionally act as a contributing risk factor. So it's important that staff training is adequate to understand these risks and how it interacts with your business profile. Typology 5 relates to emerging typologies relating to emerging technologies. In this typology, professional money laundering networks deploy chains of AI agents capable of autonomously performing financial actions across multiple platforms, including online gambling accounts. These agents, often created and orchestrated by a single professional actor, can open and operate multiple gambling accounts using synthetic or co-opted identities and schedule and execute microtransactions, such as deposits, gameplay, wagers, or withdrawals. It's important, where possible, to use tech such as behavioral data, digital identity checks, and the use of AI to mitigate these risks within your business. Technology can move really quickly, so it's important for us to try and keep up where we can. Typology 6 relates to straw accounts, a money laundering scheme that automates recruitment or management of straw account holders or mules and executes high volume microtransactions into hundreds of mule accounts to launder large sums of money via online gambling platforms. To launder the funds, AI agents can automate transactions into hundreds of mule bank accounts. Perpetrators bypass digital ID verifications using AI-generated deepfakes as well. I thought they were the same for a minute. There you go. As well as this, to conceal the true ownership or control of an entity, an individual may be installed as a legal owner or corporate vehicle or arrangement may be created to provide nominee ownership. The purpose of this is to give the business the appearance of legitimacy while enabling the concealment and commingling of illicit proceeds with legitimate funds and/or evasion of regulatory scrutiny. This mingling of illicit proceeds with legitimate funds and/or evasion of regulatory scrutiny. Finally, typology 7 is a front company typology. A company can be set up to be a front company, fully functional business with listed operations, which in turn provides access to the legitimate financial system, either to commingle illicit proceeds or present a clean face to competent authorities and regulators. For the Isle of Man sector, this would primarily be seen in online-related businesses, in online casinos, or software supply. Okay, I'm going to quickly pass you back over to Shannon to go over the Moneyval mock interviews as well.
So this is something that we thought it would be useful to very quickly touch on. It was one of the findings from the recent mock Moneyval interviews that we held. This was shared through the AML advisory group with industry representatives and also through the Strategic Industry Forum. However, since it kind of relates specifically to understanding of risk and articulation of risk, we thought we'd quickly touch on it today. So thank you for those who took part in those mock interviews. The feedback that we had from the mock assessment team was really positive. So the finding that I would like to just quickly touch on was about the articulation of risk. And whilst it's important for Moneyval, it's also worth noting for enhancing existing risk frameworks. So in the mock interviews, private sector representatives articulated a broadly coherent and consistent view of the Isle of Man risk profile across the firms that were spoken to. The key themes were well understood, which I touched on earlier, so cross-border and national flows, non-resident client bases, TCSPs as a key control interface, and the scale of online gambling activity and use of complex wealth structures. So they were articulated well. The variation was in the depth of the explanation. So the recommendation that we had from the assessment team was ensuring that firm risk to sector risk to national risk narrative is strengthened. So firms were very strong at explaining their own risk profile, so their business risk assessments, but less strong articulating the sector-wide risk and linking to the national picture. So when embedding into your business risk assessments, ask, is this risk unique to us as an operator, or is it typical of our sector? What does this risk look like across the island? So shifting from we see such and such a risk to such and such a risk is a structural feature of the online gambling sector because, and then explaining further. So firms already understand their risks. They understand them very well. It's just about putting them into that national context and the sectoral context to link it to the bigger picture. So this can include including examples to strengthen narratives, so known typologies like some of the ones that Karis has touched on, explaining the payment flows, potentially using any sanitized case studies, and being cognizant of those emerging risks noted in the national risk assessment. So that was just what I briefly wanted to touch on there, and I'll now pass over back to Karis to talk about the work that the GSC is doing to incorporate the national risk assessment into our supervision.
Yeah, so part of the point of putting a webinar on was not just to tell everybody else what we expect of them, but also to just give a really quick overview of what we plan to do and what we've already done as well. So I've put a very minimal chart in to begin with, and then we'll split into divisions and just quickly do a summary of what we've all been up to. So the GSC's pulled together an action plan from 30 plus different actions within the NRA, as well as some from other relevant reports. The actions cover a variety of areas from data sharing and policy amendments to outreach and guidance, all working to improve the Isle of Man's AML frameworks. These actions are relevant across all divisions, so we're going to split up and let you know what those are. So first of all, I'm going to pass you over to Helen in licensing, and she's going to cover their points first.
Yeah, good afternoon. My name's Helen, and as stated, I'll briefly cover the licensing division and how the findings from the NRAs have been reflected at the point of entry into the regulatory framework. From a licensing perspective, the NRAs have largely reinforced the importance of strong entry stage controls, particularly given the international, cross-border and increasingly complex nature of the sector. One of the key enhancements is our tiered onboarding approach, where applicants are categorised by risk level. This allows us to apply the proportionate but enhanced scrutiny to higher risk business models, for example, those that are international or complex in nature. Decisions are made on a case-by-case basis using structured risk assessment tools, ensuring that higher risk applications are identified early and subject to appropriate challenge and escalation. In addition, we've made updates to our policies and fitness and propriety framework to strengthen how we assess ownership, control and integrity. This reflects the NRA's emphasis on risk associated with complex ownership structures and the potential criminal control or influence. Overall, the focus for licensing is on acting in a preventative control, ensuring that risks are identified and addressed at the point of entry rather than later in the life cycle. Alongside that, a key area of focus has been strengthening both capability and cooperation. We've introduced new tools and training to enhance how we conduct due diligence, including greater use of open source intelligence and more structured assessment of customer and ownership risk. In addition to the existing AML training, there is now also mandatory training on terrorist financing and propaganda financing risks, which reflects the NRAs and ensures staff both understand the lower probability but the higher impact risks of those areas. In terms of cooperation, we continue to work closely with our domestic partners, such as the police, customs and other government agencies, as well as engaging with foreign regulators where cross-border links have been identified. This is particularly important given that the NRA highlights that much of the risk is externally driven, so effective information sharing and collaboration is key to maintaining a strong control framework. If you have any questions on this division, please put them up and we'll be happy to answer them at the end. I'm now going to hand over to Karen, who will give you an update on the General Supervision Division.
Thank you, Helen. So from a supervision perspective, We're continuing on a more risk-based and intelligence-led approach, which aligns to the typologies coming out of the NRA. In practice, that means maintaining our focus on regulatory compliance, but placing greater emphasis on how well firms are understanding and managing their structural AML risks in practice. So that means more consideration at the company level as opposed to the customer level. We're placing particular focus on areas such as ownership and control, group structures, financial flows, and B2B arrangements, all of which are highlighted in the NRA. This work's also supported by the changes being introduced in the GSC bill. We're also making greater use of operational risk assessments, enhanced monitoring, and data analytics to better target our supervisory work. Alongside this, you may see more thematic and remediation-based inspections, focusing on those specific risk areas, and that approach is already being driven by what we're seeing in practice. So what we've seen from the Supervision division is a clear reduction in major findings in the traditional operational risk areas that we assess. At the same time, though, issues are becoming more concentrated in reputation and compliance culture, along with financial risk assessment areas. This aligns directly with what we've seen through risk work in recent years, our increased focus on those key risk areas covered in the NRA and those more structural risks. So it's reflecting a more targeted supervision and improved risk identification. It's demonstrating that the supervision is evolving in line with the risk profile and with the aim of actively driving improvement in how firms are managing those risks in practice. So building on that, the typology awareness is really how those changes are being applied in practice. It allows us to consistently ID and respond to those known risks, while also improving our ability to detect new typologies as that landscape evolves. Most importantly, this isn't getting done in isolation. It's supported by closer engagement with industry via the PPP and other interagency cooperation. It helps ensure that we're not only identifying the risk consistently, but also building a more joined up picture across the sector. Alongside that, improvements in data analytics and broader framework is supported by the GSC bill are strengthening how we apply those insights in practice. Overall, it's about building on what we already have in place, positioning ourselves to be able to spot those new risks early and sharing and building that understanding more consistently across the sector using those newer and some older, more established communication channels. I'll pass on to Charlene from our AML Inspections division now to discuss, apologies. I'm going over back to Caris, some more Caris from operations.
Yeah, so just going forward on that, a lot of them, you'll probably find that because we have the same actions across, we're going to repeat ourselves a little bit. So across the operations division, they're generally focused on the implementation of enhancing data sharing agreements where they can. So memoranda of understanding are ongoing, but the divisions have a renewed focus on getting domestic and international data sharing enhanced. For example, better data sharing with the FSA and FIU are already underway, and the amendment bill has been ongoing since last year, with the guidance consultation just having finished.
Hi guys, I'm just going to go over the AML CFT guidance. We are actively updating our AML guidance to ensure it reflects the latest risks from the National Risk Assessment. This will include incorporating the emerging typologies so firms can better understand the risk and mitigating thereof. Merging typologies so firms can better understand the risk and mitigating thereof. Network guidance. The guidance specific to networks have been completed. This will obviously provide more clarity when it comes to entities operating within networks, helping them understand the AML and CFT obligations and expectations more clearly. The technology risk assessments, this is something that we'll be focusing on more going forward to support firms to identify and assessing the exposure that the risks are within their own structure and how to consistently maintain and mitigate those risks using TRAs. The biometric verification tools. So in addition, guidance is also being provided on the use of biometric verification. As digital onboarding becomes more common, it is crucial that firms understand both opportunities and risks associated with these technologies, particularly in ensuring identification verification remains robust and compliant. So with our supervisory inspections, with enhanced scrutiny, there will be an increase in supervisory scrutiny. This means inspection will be more detailed, more targeted, and more focused on areas of higher risk. The MOUs with operators, we are also working closely with operators to establish memorandum of understanding. We were trying to strengthen the information sharing and also the coordination thereof, ensuring more consistent and effective supervisory approach. Operator risk assessments, another key focus for us will be the operators risk assessments, and will include the BRA, the TRA, and the CRA. They are applying to be updated into the methodologies that were seen in the national risk assessments, and also to make sure that they are robust, consistent, and aligned with all the current expectations. Strix analysis and data systems. We are enhancing our use of Strix analysis alongside improving all our data systems. This allows for more sophisticated risk profiling and a better information inspection. Prioritization, ensuring resources are detected where they are needed most. The remediation of inspections, it has changed a while ago, but the remediation is now sitting with the AML team itself. So in addition, we'll be increasing the emphasis on those remediations of inspections, meaning that we'd be more follow-up, more rigorous understanding and identifying the issues that are affected and addressed by operators. Lastly, the thematic inspections and typologies. We will be introducing a more thematic inspection program. These will focus on emerging typologies, allowing us to proactively address all the new and evolving risks across the sector. Last, just going through the typology awareness. It is a bit of repetition as before, so I'm going to try and just get to the main parts. A main focus for the AML team will be the staff awareness on AI, tech, and virtual assets. It's most important that the staff are equipped to recognize how these typologies are manifested in practice so they can respond appropriately. Feeding the NRA typologies into guidance. We're also ensuring the typologies identified through the national risk assessments will be directly associated within our guidance that we will be finishing soon, I hope. This helps ensure that the firms are aligned with the latest intelligence and can adapt with their controls and accordingly, so you know from the typologies what you are required to do. Lastly, data sharing with partners and agencies. We will also be looking to improving our data sharing with partner agencies is a key focus. Greater collaboration and information exchange enhances our collaborative ability to detect, prevent, and respond to any financial crime risks more effectively going forward. Thank you so much, guys.
Okay, I feel everyone's going to be sick of me. So from an outreach perspective, as Shirley noted, guidance is really one of the big items for the NRA. So originally I was waiting until the PF NRA came out because we're not sure on the timelines. We're just getting stuck into putting the new guidance out now. So in addition to adding the NRA items to the guidance, we've also had just a general revamp based on feedback from the sector. So they're going to contain clearer typology diagrams, some of which are in this presentation earlier as well as having track changes. In future, the GSC is also looking to collaborate with partner agencies to produce even more enhanced and specific guidance in line with NRA recommendations as well. As noted before, the bill's ongoing and the outreach teams played a role in organising consultation feedback sessions and helping to collate all the information gathered and feed it back to Ben. In future, there's also a commitment from the GSC to engage in more stakeholder feedback through thematics, surveys and drop-in sessions, like we already do, but just doing more if we can. And finally, there's going to be outreach on B2B emerging typologies to operators, GSC staff and ancillary parties in order to generally promote better understanding of the risks.
So just to close the presentation part of this webinar off, I'll briefly cover what we expect of operators. This, of course, won't be news to anyone. Everyone will be well aware of what's expected, but we'll just quickly run through that. So firms are expected to review the national risk assessment and sectoral findings. These findings should be embedded into their own risk frameworks, so business, customer, and technology risk assessments. Controls should be reviewed in line with the national risk assessment to ensure that they are effective and proportionate to the risks. Firms should maintain ongoing vigilance through effective monitoring frameworks, so in accordance to your code obligations. Controls should be dynamic and risk-based. Transaction monitoring systems should be reviewed and calibrated to those risks. CDD and EDD measures should be appropriately targeted. The expectation is to not just have controls in place, but to regularly review them and ensure that they are effective. From a national perspective, the national risk assessment will be, there'll be a kind of review every couple of years to ensure it's up to date, but we'll still continue the cycle that we've had previously. Collaboration is also key to ensuring effective controls. So firms should continue actively engaging with supervisors and with other agencies where appropriate, so particularly through the FIU's Financial Crime Partnership that has been mentioned today. Sharing information, maintaining that open dialogue helps ensure that controls are well informed, proportionate and consistent where required. It was mentioned at the Financial Crime Conference last year during the presentation that the FBI did, that no single organisation has a complete view, and it was emphasised that everyone has a role to play. So meaningful collaboration is essential, because obviously each firm or agency only sees part of that picture. So finally, in respect of timelines, in line with the FSA, we expect firms to review and update their risk frameworks to integrate the NRA findings by September. By this point, we would expect updated risk assessments and evidence that appropriate control enhancements have been implemented where needed. And also consider what's been said today by the different divisions and their supervisory priorities. Thank you very much, everyone, for attending. Like we said, if there's anything else you think of afterwards, just reach out and let us know. We hope that this has been helpful for you. We can also circulate the link to the Countering Financial Crime website with the national risk assessments and the sectoral assessments on it. We will look to publish this webinar on our website and on our YouTube page. And then once the proliferation financing risk assessment has all been signed, sealed, delivered, we'll be making sure that we're doing lots of comms to share the findings of that as well. So, well, thank you. Okay, thank you. Enjoy the rest of your day. Goodbye.